Now, joining us now, we're going to talk more about the markets with Sandra Cho. She's the president and founder of Pointwealth Capital Management. Sandra, let's start with some of the things that we're seeing across the market here, because you are seeing love in those small to mid caps. It has been something we've seen for recent weeks. At what point do you see the other parts of the market really start to catch up with the love that we've seen in the large caps?
Yeah, we've definitely seen, more participation from the rest of the market, not just the Magnificent Seven, which has gone up about 75% year to date. Incredible. We're now seeing that rally kind of broaden. So we're seeing small cap tick up, and, small cap value really has only gone up 15% year to date. So, we really think that that's going to start picking up pace in 2024.
What sets the stage for 2024? With the rally we've already seen in especially the tech indices, how much more steam is there really to drive the market higher into next year?
Well, with AI, you could see the Mag 7 go up before it comes down. That said, what supports the stock price in the Mag 7 right now? It's going to be hard to really see, revenue, fulfilled and support the prices that we're seeing and the increase that we saw in 2023. That said, we're looking at these other sectors that haven't done as well in 2023, like, for example, energy, which you definitely see an uptick today, consumer staples, healthcare, utilities. These four sectors are negative still for 2023. We think that there is going to be that reversion to the mean. So if 2023 was a year of disparity, where you saw large cap growth really outperform and you were rewarded for concentration, we really see 2024 as the year of equilibrium, where you're going to see the laggards kind of come back up.
Do we start to see that very early on in the new year, Sandra? Is there going to be a lot of reallocation early in January?
Well, we're starting to see that now, and so we think that is going to continue and set the pace for 2024. That said, you were talking about volatility in 2024 and perhaps seeing an uptick in the VIX. We also believe that 2024 is, presidential election year. We generally see volatility during those years, so we definitely see that. But back to the question, we do see that, small cap and some of these laggards are going to be coming up.
You did mention that it's likely that the mega caps, the Magnificent Seven, could continue to perform well. But what will they do with the amount of cash that they have absorbed so far? They're very cash rich right now.
Absolutely. You see $7 to $8 trillion that have flowed into money markets, and it's still the #1 attraction for inflows. And we really do believe that there's going to be some FOMO, fear of missing out. You're going to see some of that cash coming into both equities and the fixed income markets in 2024, and that's going to be that tailwind. So we are cautiously optimistic about both markets.
You're finally starting to see a significant bid in the bond market. At this point, do you start to play the bond market more significantly next year, or do you play equities?
Well, we are seeing low equity risk premium, so we are seeing that it really doesn't pay to be necessarily overweight in equities versus fixed income in 2024. You've got the yield in fixed income, very, very attractive. And then you also see the potential with rate cuts. You see a bit more appreciation potential in fixed income. So combine the two, and you get a very attractive market in fixed income. That said, not all fixed income is created equal. We're seeing more opportunity in investment grade. We see high yield right now. Those spreads are definitely very tight. So we are slightly overweight fixed income, and we're overweight investment grade, going more long-term than, say, shorter term.
When you're thinking about the equity market, do you play the indices, or do you start to pick on specific names that have been unloved in this market?
Yes, definitely picking the names that, have been lacking in the love in 2023. We see that, there has been obviously this trend over the past years to go towards passive investing in ETFs. But we really see 2024 that it's going to be more about active investing. If you're going to stay passive, we would definitely recommend going more equal weight S&P 500 versus market weight because there has been this dominance with large cap growth. So if you go equal weight, you're going to see just naturally, if the laggards pick up, you're going to see more outperformance.